Hey everyone, I'm Charting Man Dan with the Chart Guys. Wild end to the week with Trump-China tariff news, the biggest dump we've seen in the broader market in months. And then to top it all off, the biggest crypto liquidation we've ever seen after the bell rang at the end of the day. There's a lot to check in on, and we're going to talk about short and quantum stocks, which I've been focusing on, and a whole lot more. Learn how to trade stocks, crypto, and hype sectors with a global chat room led by professional traders, as well as daily live streams at chartguys.com. All right, so I'm going to talk about the crypto scenario a lot more in my next crypto stream early this coming week, but we'll definitely touch on things here the second half of this video as we check in on some crypto stocks. So, big time drop. Real quick summary of the news. Trump and China aren't getting along, and, China is restricting strategic metals, and Trump's going to respond with a 100% tariff, and maybe they're not going to meet at the upcoming, a summit, but maybe they're going to still meet. That's all I know as far as the in-depth that I'm following the fundamentals. That's enough for me. That's all I need to know. So from there, we got a big drop, and this is a sucker punch. So I'm seeing a lot of posts going viral around Twitter saying, there's no way technical analysis could have predicted what happens. I don't care how good you are, blah, blah, blah. No. In terms of the day, could we say we're about to drop 3% on Friday? No, technical analysis cannot tell you that, but it can get you pretty close and it can get you ready for it. So Monday afternoon, bulls obviously have full control, but bull complacency and leveraged longs, we know everybody's confident that we're going up. They're just stacking. You see the huge account wins being posted. People are just leveraging up into this strength. It'll have me starting to watch for a potential sucker punch into weekly consolidation with many names having space for a weekly high or low. 3 days later, 3 days, we dump and get a sucker punch. Did I predict it? I mean, roughly, but to nail a home run, you need to nail the day. But that had you not hurt. I wasn't hurt by the big drop in any meaningful way. Cannabis and psychedelic account definitely took a solid hit, but day trade account up at all-time highs, swing trade account very close to all-time highs, and that's because we were prepared for this move. When you grind up for a certain point, it's inevitable. And I was just looking at SPY, and I was looking at the weekly time frame and saying, we haven't touched weekly EMA 12 in 5.5 months. The last time that happened was this melt up, end of 2023, start of 2024. That was that cup and handle. Remember this cup and handle on the NASDAQ that some people were laughing at me about? One guy in particular, a money manager. Anyways, that's the second time it's happened, 5.5 months. And the other time that was longer, so this is the longest 2 times that's ever happened, aside from 30 years ago, 1995. So that tells me, don't be surprised at all when we touch weekly EMA 12. We should be expecting it. We don't know when it's going to happen. We know it's pretty darn soon, more likely than not. So this is a sucker punch. What is a sucker punch? It is when, exactly what I said, bulls have complacency, full control out of seemingly nowhere. If you've seen it enough times, it's not out of nowhere, but seemingly out of nowhere, you dump in a big way. I thought Tuesday was going to be it potentially, because Tuesday we had this hourly drop. It was pretty solid on the morning. And I was ready. I was saying, okay, is this going to be the sucker punch? You got to confirm an hourly downtrend. And we didn't. So very quickly could tell, nope, that's not it. And what was missing? This is a technical sucker punch. This is a technical and fundamental sucker punch. And there's a very big difference there. Obviously, I'm way more technical than fundamentals. But if something's going to be big, it has to have a fundamental narrative. Because otherwise the herd doesn't jump on board. And CNBC isn't talking about the reason. When you give people the reason the thing is happening and their minds can make that connection, and then that makes them more inclined to act. If it's out of nowhere and say, why is the market down 2%? We've seen sucker punches without a clear fundamental reason. Why is the market down 1.5% today? Look around. Oh, there's no reason. All right, who cares? We'll bounce back. That's what the retail mind does. If you drop in a fundamental fear on top of the technical, it magnifies. And so it was a much bigger follow-through drop. And there were no fake outs. Once the news hit, just 5-minute lower highs every single bounce attempt. Lower high, lower high, lower high, lower high, lower high, lower high, all the way to the end of the day. After hours, we got another headline that was, I think the 100% number came out. And then we had word that Trump, they'll still maybe meet at the summit. So we got some relief. We'll see if we gap down on Monday, maybe a little bit. Definitely looking for some relief bounce. The hourly relief bounce got going on that other headline. And we'll be looking for a 4-hour oversold bounce and then a lower high. Guess what my question is? So we have one check mark for bears, right? Lose the daily uptrend. And they did it with a bang in a meaningful way. What's my next check mark? Can we confirm the first daily downtrend in over 5 months? When this sucker punch bottom is hit, many times we recover back to highs, just like here, big sucker punch, full recovery. Is this time different? Confirm the daily downtrend, and this time will be different. So that's what we're watching this coming week. That's the information that I care most about. If we do, we take a step back and we say, okay, the market environment is shifting for the first time in 5 months. I need to shift my trading style for the first time in 5 months. Weekly, again, we're testing it on ES. SPY is not there yet. But if we lose weekly EMA 12, I'll be looking at the monthly then and watching for monthly consolidation and keeping in mind, again, I've said in these videos before, we will see monthly consolidation. When we do, everybody will be calling a top. There'll be some fear returning in the market, but a monthly higher low will be the most likely scenario. There's so much space for it. Whether it's off EMA 12 for a bull flag in continuation, whether it's a big enough pullback to shape up an equilibrium, I don't know. We'll take it one day at a time. But I do know that I'm not going to be comfortable scouting longer term swing entries as a bull without monthly consolidation in many names. Some names I'll be looking for weekly higher lows, even quantum potentially. But I need monthly higher lows on the S&P 500 and the NASDAQ if I'm going to be comfortable with longer term swing entries, just because of the nature of the straight up move and knowing monthly consolidation is inevitable. So pretty much if we confirm the daily downtrend, that will tell me the probabilities for monthly consolidation are increasing to more significant than they've been in the last 5 months. And so that's what this week is all about. And there wasn't rotation going on. In our chat room now, we have an alert bot that lets us know, me talking about, are all major sectors hitting the low of the day together? XLF, XLV, QQQ. And that bot fired like 4 times on Friday saying, yeah, we're all at the low. And even the more extreme one where there's like 8 different sectors were all at the low at the same time. So there wasn't rotation going on. It was clearly a news-driven liquidation. Longs are getting liquidated on a move like this. How do you know? I don't need to look at any data. I can look at the chart and know that longs are positioned overconfidently to get liquidated. And of course, social media and watching social media is an aspect of that as well, in terms of knowing what's going on under the hood of the market to a certain degree, as much as I need to as a retail trader. But as far as major support levels, you can mark them out. Again, I care about weekly EMA 12 the most right now. But there's a couple, this is a very important double bottom down there. But, this is a support zone to be keeping an eye on for the S&P 500. And that's it, one day at a time. We got fairly close to daily. No, we didn't. If we confirm the daily downtrend, we'll be watching daily oversold conditions. But potential shift underway. And we can be looking for hourly lower highs and daily lower highs on bounces if you're trying to position bear. And if we fully recover, then you'll stop out with some small losses, and that'll be that. But, I'll talk more about quantum, how I've been focused bear this past week when we get there. NASDAQ, big drop as well. A couple levels. There's a previous resistance into a support. This is the double bottom that is meaningful. Again, it's not even in play. The weekly chart, EMA 12. So if it's a quick sucker punch that doesn't confirm the daily downtrend, it's just another quick, healthy weekly higher low. If we confirm the daily downtrend, we zoom out and watch for monthly consolidation to be shaping up. I'm also not forgetting the data point. Again, I'm just generalizing and I'm making the numbers up. I'm pretty close, but 85% of the time from the October low to the end of the year, the NASDAQ has been green the last 35 years, something like that. It was an astounding enough data point where I said, wow, that's you use that until it stops working. And it worked really well in 2023 to 2024. That other time that we went 5.5 months without touching, that other melt up. So that doesn't happen often. Gone, whatever I was talking about. So we'll pick it up with, do we confirm the daily downtrend? Semiconductors, a little bit easier to see the top, just in the sense that we rejected from resistance. You look at the 4-hour here, and we had the all-time high, and we got up right to it. Could this be a 4-hour cup and handle? Maybe. No. As soon as you break that low, it's close. Heading into Friday morning, this could be a 4-hour cup and handle, absolutely. But then as soon as you break that low, probabilities massively decrease that it is a 4-hour cup and handle. And obviously, dropping with everything else. And so could you consider that a confirmed daily downtrend? You can. I wouldn't argue with you. There's a bunch of gaps on the way down to be watching. So weekly EMA 12 is a long ways away. Look how much we can drop. Weekly EMA 12 will tick up a bit on Monday, but we could drop another 5% before we're getting to weekly EMA 12. And that would still be very healthy. So again, we have to keep the context in mind of where we're coming from and know that pullbacks are a part of this market. I posted on Twitter last week, I think it was, the next time the market sees a very normal 5% pullback, it's going to feel like the end of the world because of how the last 5 months have been. The last 5 months have been very unusual, not how markets usually are acting. And so you get, again, that's the complacency aspect. You just get used to looking at your phone every morning and green again. And obviously it doesn't last that way. So we're looking for hourly lower highs on the bounces, daily lower highs on the bounces. How much follow through do we get? As far as the healthcare sector, again, healthcare dropped with it as well. Daily bull flag attempt, but a lower high and lower low. But again, in the grand scheme of things, there's no red flags here at the moment. Again, this is only one day, right? We've only been one day. So we got to see how things go. My biggest concern is, over leveraged longs blowing up, which when we talk about crypto, that's what happened there. But if the healthcare sector backtests 140 and holds it, this previous resistance, no red flags. We went straight up. That would be a nice little higher low. We'll see if we start weekly consolidation. As far as the monthly is concerned, we'll eventually have to confirm a monthly uptrend if we're going to set a yearly higher low. Going back to the long-term patterns video, but I'm still on the daily at this point and still watching. Again, just looking at the rotation, XLV divided by SPY, there was still rotation going on. Friday, there was relative strength in healthcare. Again, we just didn't drop as hard as everything else. We dropped, but not as hard. And so on Friday, we hit the strongest we've been compared to the S&P 500 in almost 3 months. So watching, does that trend continue? We know the biotech sector has been on absolute fire. Look at his daily chart. You wouldn't even know anything's wrong here. We're still in a daily uptrend. Biotech sector, if the bulls hold 102.55, they're in complete control. After that, we go to the daily EMA 12. Well, daily EMA 12 will be there. After that, we'll go to weekly, but the biotech sector has been seeing massive rotation. XBI divided by SPY hitting its highest levels this past week of the year. 10-month highs. Clear rotation going on. So, again, that's what I look for. This is an event where everything's impacted, and then when you find a fear bottom, even if it's just an initial fear bottom, when the dust is settling, where is the capital rotating to? So do bears confirm the daily downtrend? Where's the capital rotating to? And I'm just watching how are the sectors interacting with each other. And, IWM divided by QQQ still isn't proving anything for these bulls. We still need a weekly uptrend. There's been pretty much a month of not much more information. So when the dust settles, I'm watching these things. Is it still healthcare and biotech? Does IWM benefit? We knew XLF volatility was coming. Again, I can't pinpoint the day by looking at the charts, but I can say, get ready. The financial sector is about to see a big spike in volatility. Why can I say that? Because if you look at the range of this 6-week period and you go back and measure when's the last time we had a 6-week period in that tight of a range, you're not going to find it for a very, very, very long time, which tells us This tight range is going to break. We are going to see volatility when this tight range breaks and a volume spike. That we can know is certain. The direction is the unknown and when is the unknown. But if we're prepared for it, then we can capitalize on it, even if we're not nailing tops and bottoms. So first bear break, 53.06. The big bear break was 52.84, and a whole lot of bear follow through from that. So we're then looking down at 52.29, which broke. The next major level for me is this zone. There's a gap down there. And go to the monthly chart. Monthly consolidation's underway. We're watching monthly EMA 12. But first major sector that I'm watching where monthly consolidation is underway. And when I say major sector, I just mean the names that are influencing the S&P 500 the most because they have the most sector weight. IWM, trim some more longs on this carnage. Again, swing trade entry was here, took some profit along the way, took some more profit, I think in here, took some more profit. So now it's a very small position. There are times where I'll leave a small enough position where it's not going to be a factor in my account, but it ensures that I keep an eye on it because I'm going to be watching IWM for a weekly high or low. I will consider anything above this a weekly high or low. And so again, that was the last time we saw a sucker punch in IWM, and we didn't confirm a daily downtrend in a meaningful way. Again, it was just there's a tiny little dinky pivot in there. If you want to call that a daily downtrend, you can. For me, it was, okay, once the fear bottom is hit, do we follow through or not? And we didn't. And so we're watching, is this the same thing or is this different? But again, you look at IWM and almost, tiny little wick there, but almost straight up stair step to the tune of 50% plus. NASDAQ was over 50%, 44%. So again, there's just so many places where looking for a monthly high or low would have me most comfortable as far as resetting things a bit. All right, individual names. Tesla had a nice 4-hour equilibrium into Friday. I was viewing this as our high, low, lower high, higher low, lower high, held support. There was a fake out here. We did break resistance and then fell apart. So we're watching a gap fill of 396.69 as a potential target. We're watching for a weekly high or low. Again, another name that just, a bit extended. Could this be a cup and handle pattern? Again, the psychology is there. Big period of consolidation, fail resistance. My simple statement will be if weekly EMA 12 holds, it's a potential cup and handle. Obviously, the broader market would need to fully recover. This would need to be short-lived. We would need a bullish earnings reaction in a couple of weeks. These things would have to align, but it is a possibility. And I would need to see a drop back under 380 if I started to then view things as the equilibrium. Because again, this is a monthly stair step up, stair step down, stair step up. Is this a monthly lower high for an equilibrium? That's the information we're going to be getting as far as how much retracement size do we see. And we know 382 or less is a potential bull flag. That's down in the 370s. But that's what I'm watching for Tesla into the end of the year. Cup and handle or monthly equilibrium. And that's the information we're going to get. And NASDAQ is going to dictate a lot of that answer. All right, quantum. So I've been shorting quantum. And this has been fascinating for me and very enjoyable. And it's just I've got every trader's got the little voices going on, whether it's fear, greed, whatever. But my little voices are my rules. And so as I'm looking short quantum, my little voice is saying, why are you fighting momentum? Why are you fighting a blue sky bull? You shouldn't be doing this. You know better than this. My other voice is saying, I'm having fun. I'm making money doing it. It's going well. It's engaging me. It's something new. And I'm sharpening a skill set. I am adding to, I very rarely will average down or up. I very rarely will add to a short that is already profitable. That's something I've been getting better at on the long side, trying to add to winners. And I just never do it on the short side because I short way less as far as my edge is concerned. But I've been doing that on this move. And for example, on Friday, QBTS, I was short in swing positions that I've been talking about over the last few days. And I shorted that, and I shorted that. And I wasn't nailing them, again, scale in, scale out partial, stick a stop over the high. And again, I'm just having a lot of fun. So I was shorting. The way that I do it is I watch IONQ as the sector leader. I watch the NASDAQ to see if there's relative strength or weakness in quantum that day, which changes throughout the day oftentimes. And then I'm watching QBTS and RGTI for the actual trades. I've been shorting RGTI and QBTS, and it became very clear RGTI is the lead bull in the sector and kept hitting higher highs. We're still not seeing daily consolidation yet. Probably going to start this coming week. But that told me, okay, covered my RGTI short and then focused more on QBTS. It's pretty much telling me where to look. And I actually traded RGTI long on this bounce. So the other psychological training that I'm doing is, number one, swing trading shorts, which I do much less often. Hedging's different, but straight up swing trading a short. And it's really hard for me because when I'm at the screen, I'm very confident in when 15-minute bounces are going to take place, when hourly bounces are going to take place because of my day trading edge. And so I have to sit there and watch my swing trade position lose, a 2-day maker in value on a 15-minute bounce on a support hold. And I'm sitting there like, I know that's going to happen. Why don't I act on it? Because my history is I act on those shorter term timeframes, but eventually you get to a point where you miss the re-entry and the bigger picture move happens without you. So you got to hold the core to get the bigger picture move, which for me is weekly consolidation. That's my end goal, is weekly consolidation in quantum. And finally, we have the NASDAQ help for it. But even Friday, quantum was holding up better than most things. But my mindset was, okay, I'm in my QBTS swing short. I've got the core position that I am holding. I'm not exiting this. I can add to it and then exit what I add. That's fine, but I'm not going to have less than this many shares short until I get the clear signal to exit this position. And so how do I combat that? All right, I'll long RGTI for this bounce so that holding through the bounce of QBTS is less painful. And that's the way I mentally deal with it. But at this point, RGTI, I will be scouting an hourly lower high short on Monday because anything under the all-time high is an hourly lower high. And we'll be looking for daily consolidation, and then we'll look for hourly oversold conditions. And we got close to those, and we probably hit them after hours. Nope, didn't. So we'll look for hourly oversold as an initial target, daily EMA 12 as well. But clearly bull there. IONQ, I sold the last of my long runner. Again, I longed down here on this equilibrium or tightening range breaking bull. Again, same concept as XLF. Look at this sideways and look back. When have we seen that for 5-6 days in a row? It hasn't happened on this run. We know it's about to get volatile. And so there was a setup for a potential monthly cup and handle. So I was ready to go long. I didn't get my entry off support that I wanted, but I bought into momentum, anticipating there would be follow through because of how tight we had gotten. But I exited my last runner position 80.65. And man, I nailed that top. Well, no. It's easy to nail the top and bottom when you're making multiple attempts. That's why I scale in and out, because I'm not going to nail tops and bottoms. I sold some in the 50s. I sold some in the 60s, 1/3 50s, 1/3 60s. And then I waited, and I was going to say, I'm going to wait for the bears to knock me out of this one. But then I got pretty darn confident that a top was going to be in, which is why I started focusing shorting on the sector. And so now we're looking at weekly consolidation potentially being underway. We're looking for anything above 60.14 to be a higher low. Do we drop enough to shape up a head and shoulders? Maybe, but IONQ dictates a lot. There was dilution news on Friday as well. It dictates a lot about what I'm doing. QBTS did hold support, so I definitely want to see 32.51 break on Monday. There's a little gap down at 29.61 as a potential target. Daily EMA 12, of course. Same deal. So, and again, when I've been trading these names that have been going against me, I started shorting Tuesday, really focused, and we hit higher highs. And, my account, I was very actively trading, day trading. I probably had Thursday 60 orders of quantum. because again, it's short, short, cover, 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 position, re-short, short, cover, cover, cover. And very quickly you get 30, 40, 50, 60 orders on the day. And again, just engaging and fun. A challenge, which I enjoyed. Okay, quantum, no. Uranium, really strong start on Friday. CGC all-time highs, definitely looking like a rising wedge. Got to be cautious of that. Definitely one of the sectors that held on better through the carnage. So watch that rising wedge. I would say a break of 84.52 is telling us it's breaking bear. And again, you look at these monthly charts. Monthly consolidation will not be surprising. The sector leader went 160%. What is that? Since last real monthly consolidation. Wow, good math. 162%. OKLO has been the euphoria leader since last monthly consolidation, 827%. One of the reasons it's so strong and gets so much follow through is because there's a lot of fundamental bears on it. Rightfully so, but fundamental bears very often are too early because the valuations don't make sense, but the bulls running it in blue sky breakout don't care at all about valuations. And so another big move up and held on fine during the carnage. This was a nice 15-minute equilibrium. The market's falling apart. You've got and this was a little trade I took on the long side. Very limited on the long side when we're dumping like that. But again, because I'm short swing focused, I've got the shorts covered, I can take little I'm more inclined to take little bull trades along the way. And, I stopped out a couple of them break even, one of them break even, got the IONQ win one time, got an OKLL win. And again, it was just a playoff support. And you just need a 5-minute bounce on QQQ to help that. And there was relative strength. There were three things: a support level to play off of, lead bull on the day, still up 8% at that point or something, and relative strength. If you look at the 1-minute time frame, if you care enough, I'm not going to do it, go look at OKLO for that 15-minute higher low on the 1 minute, compare it to QQQ on the 1 minute at that point in time, and you'll see that OKLO was basing out and bouncing while QQQ was still dropping. And that was bulls defending support. And again, nothing massive, right? Just a little 15-minute bounce, but that's 4%. Get 2% of that, and that's a very worthwhile day trade. So we're going to look for an hourly lower high on OKLO, and if we confirm the hourly downtrend, we know a temporary top will be in. But again, I'm looking for where's the dust settling and where's the relative strength. Is it going to be the rare earth metals? I'm looking for weekly higher lows in REMX. Rare earth ETF, I'll be scouting a weekly higher low there. I'll be watching lithium ETF for a weekly higher low. Again, it just got to a point, I am not comfortable long in these things. They're going straight up for months. Got to reset. And so now we got the reset. And we're going to be watching for weekly higher lows. Crypto. Man, this is a long video. All right. So what happened with crypto? I took a screenshot. I probably lost it. But the bell rang. Another headline came out where the stock market dropped another 1% after hours. And it was the 100% China tariff deal. And then Bitcoin dumps and a massive liquidation event took place in crypto. The space have never seen anything like this. This is what the altcoins were doing. Minus 55, 55, 57. Trump coin was down 76%. It then bounced hundreds percent on some exchanges. 58, 66, you get the idea. Anybody using leverage on altcoins was liquidated. Even just 2 times liquidated. What happened? Intentional to a certain degree. Timing, wait till the market close. Less liquidity. The ETFs, way less liquidity for Bitcoin and Ethereum. I was trading ETHA on the bounce. And what happens when you get these kind of liquidations, in a normal operating market environment, you got your arbitrage bots. You got the bots that are keeping correlations together, keeping things nice and tight, liquid, nice liquid market, tight bid-ask spread. And as soon as the bell rings, the after hours market makers, there's less of them. It's a much less liquid market. And everything depegged. You've got Trump coin on this exchange and Trump coin on this exchange. I'm just using it as an example. There's a billion examples. No, not that many. Sol, 88, whatever it is. Differences of 10 to 15 to 20%, this exchange to this. So again, the arbitrage bots, if something's 10% difference, you buy the coin here for 10% less, you send it to this exchange and you sell it here for 10% more, and that shrinks the arbitrage. But everything went wild. And so I'm trading ETHA after hours. And this is nothing new for us that have been trading the sector for a long time. This happened this is bigger. But, like the FTX collapse and the CVID dump, they liquidated 1.8 billion. This liquidated $19 billion from crypto. Bitcoin didn't drop as much. It was a big solid red day, but nothing, you zoom out, it's nothing massive. But it's the other things, that had the monster drops. And for those of you who hate crypto, all the junk coins, Dogecoin, Fartcoin, all this stuff, they dropped like 80%. And serves you right is what's going on in your mind, I know. But it's always a game of flashing numbers. Honestly, my experience in penny stocks and crypto helps me treat the broader market as a game of flashing numbers. And that, without a doubt, helps me in my trading abilities. And, it's a big lesson. I'd never use leverage. It's a big lesson against that. And it's a big lesson, I retweeted worst take of 2025, someone calling people who use stop losses losers. And for some reason, a lot of people are liking that post. Dumbest post I've seen all year. And then you've got this where it only takes one. And my response to the post was, I am confident that I can trade myself out of 99.9% of trades without using a stop loss because of my capital size. I'm not using it. I've got a large pile of cash as a day trader, and I'm only using a bit of that. I'm not using a ton of it for my day trades. And so I can always, I've always got more capital to deploy. And what happens is you get your way out of any scenario 100 times in a row, and you get overconfident, and then the one happens, the 1 in 1,000, and you blow up. And when I use stop losses, I'm protecting against the 0.1%, because you get oil negative, you get GME squeeze, you get the VIX ETF blow up years ago, 2018 maybe. And this is now added to that, crypto 2025, where something that has never happened before can happen, and everything that you are used to goes out the window, and it only takes one. It takes one to blow up your account. It takes one to erase a decade of good trading. And so I will never put myself in a position where that's even a possibility. If Fidelity goes liquid, I'm in big trouble. But that's the only major risk that I have. So crypto, wild. BMNR. You can see after hours, again, liquidity. We fall off a cliff. That wasn't bad. 12%, bounce of 15%. Anyways, BMNR was a 2-day equilibrium that we've been watching, and just beautiful. 1,000%, massive pullback. 100%, big pullback. 50% plus, big pullback. Just tightening up, which is expected, but a little fake out. Is that a bull break, no follow through? I call that a double top. We broke by 2%. But when you're seeing things go hundreds of percent, 2% is very, very small. And we were probably only over that level for like 10 minutes that morning. So I'm still viewing this as an equilibrium. I view that as a double top, and I view anything above 47.21 as a higher low. And I'm definitely watching the direction this equilibrium is going to break this coming week. This is the ETH, or the ETH Treasury Company. So maybe there's a play off 47.21 this coming week to keep tightening up. We'll see. But expecting, coin had a big red day. A lot of these names were coming from a ton of strength. CLSK, look at this move. Just straight up, Riot. These names had been underperforming for many, many months. They started playing catch up. IREN putting on an absolute show. Look at this weekly chart. It's like plus 350% since last weekly consolidation. 300%. We know we're going to consolidate on the weekly here soon. Anyways, crypto, monster drop. Not a ton of recovery yet. But anyways, liquidations, does that have major impact on the legacy markets? Maybe, maybe not. But a nice reminder, a good lesson, and something to pay attention to. I will be watching, again, some of these names for weekly higher lows. IREN, I'll be scouting an eventual weekly higher low. CLSK, watching for an eventual weekly higher low. I don't want to talk anymore, but we're going to get through commodities. So dollar. So dollar getting follow through now over weekly EMA 12 convincingly. And next level 126, which would be the highest level in months coming into play. You know, do we get some kind of inverse head and shoulders? Maybe, but bulls will have to eventually confirm a weekly uptrend if we're going to see significant follow through. Metal's still strong. Look at gold. Gold's just fine. If daily EMA 12 is support, gold bull's in full control. Then we zoom out and do the weekly. We've been doing the weekly all year. Silver, a little bit more toppy. Volatility's been off the chain to end the week, mostly Thursday. Disconnect here as well. So XAU USG, very disconnected in price from silver futures. And so that gets, again, it's just massive volatility. You know, maybe some shorts getting squeezed, just leading to disconnect in the markets. So 4 hour, still holding on. Eventually, we're scouting weekly higher lows in the metals, but we haven't topped out convincingly just yet. The miners topped out a little more convincingly. Double top on GDX was a little clue into a pullback. GDXJ, still holding daily EMA 12. So can the miners hang on, or is it time for more significant consolidation there? That's a question I have this coming week. Bears certainly have to prove it on the metals. Oil, big bear break Friday. Monthly, still pulling back. We're looking for a monthly higher or low. Compared to 59.90, there is no sign of it. No, compared to 50, there is no sign of it. But that's the most likely scenario for me, so we'll watch the daily downtrend in the meantime. Not a ton of support down here. I'm looking at 58.17. Looks like that held. And then a base down at 56. But daily downtrend. When the bulls regain a daily uptrend, it's the first tiny baby step towards a potential monthly high or low. But I don't do much with oil. Natural gas, giving it back. Weekly EMA 12 rejection. UNG. Yeah, just sideways. Still a bear flag there. Bear flag unless proven otherwise. Weekly uptrend confirmed with zero follow through means zoom out and look for a bear flag, so potential monthly bear flag. Key support 1206 on UNG. If that breaks, bear flag probabilities go up. If you stuck through for 38 minutes, congrats. Well done. Sucker Punch video, if you don't know what that is, on our website, just Google Chart Guys Sucker Punch. Crypto live stream early this coming week to talk a bit more in depth about how to capitalize on that. Because it is massive opportunity for those that have cash. That's why I love being cash a lot more than in positions in crypto. All right, do good things. End it here with, went to a music video in Tennessee, the Caverns, which is venues in caves, which is really cool. For a little festival. Had a good time. Met a Chart Guys member there, actually randomly. Ran into him at the mouth of a cave. All right, see you soon.
Everybody stay warm. See you later.